Obstacles are placed in your way to see if you really have what it takes to reach your goals. My friends, the obstacle for us each and every day, 10 to 15 minutes following these charts. And let me tell you what it will do for you is it will give you an intimate knowledge of the ETFs and the stocks that you follow and that you practice trade. It will help you develop your skills by on-the-job training, which is the only way. And I tell everyone, don't worry about how long it takes. Once you master the markets, you'll make up for every minute you ever spent. And here's the other thing. Look at the unrelenting up movement of this market. It has been going up, pulled back just a little bit in April, and then up again, and it just keeps going. It's up for the day 1%. I'm doing this a little early today. It's 3:30. At some point, my friends, this will end, and this is where your training is going to be even more important. And that is, did you take the training over the weekend on inverse funds, how to make money when markets crash? How to profit when things go down. When you look at the likes of Warren Buffett and other investors who are holding on to loads and loads of cash because they know that when the market does crash, it is going to be a fire sale of prices. Not only can you buy after things have crashed, but of course you can ride the tumble down if you know how to chart the market and how to use inverse funds. Now again, this is not for the faint of heart. This is not for the ignorant, people who've never practiced traded with them and experimented with them. That's why I'm encouraging you, please make sure that you understand how these things work and that you practice them so that you understand, so that you can make things work. Now, let's jump into these charts and see where things are going. We see the S&P is up for the day, 1.02% right now. And again, another strong week starting off, although we don't have any volume. And again, it is the summertime trading zone. Small things can affect the market because you don't have the volume. It's like splashing water out of a bathtub by jumping in as opposed to a pool. Doesn't go over the rim very well in a huge Olympic-sized pool, but in the bathtub, if you jump in, yes, you can splash the water out. So again, volume is the same way in the market. When there's not a lot of volume in the market, it's like a small bathtub. A little bit of movement can make a big effect. And that is what we are in the summertime trading zone. That's why you hear that saying, sell in May and go away, live to trade another day. That is because things can get all seesawy back and forth. They used to. Now, of course, since we printed billions, trillions of dollars backed by nothing, it looks like things that have real value can just go up, go up, go up, keep going up. But what goes up must come down. Right now, still going up. We can see this latest 2-day candle well above the weekly trend line. We look at the half day up in the morning, further up in the afternoon. A good day, but even better day over here in our trade because we had the telltale signs of a high volume interim low, a green spinning top, average volume there, and this latest takeoff. And again, up over 1.5% for the day right now. Again, the volume on the 2-day is decent. The volume on the weekly, again, we're just starting off, but you can go back many weeks and see it's been well below average. Look at in the morning, things were up, and then in the afternoon, really accelerating on the tech stocks. That is the NASDAQ 100. Let's go to TLT. It's down 1% for the day. We can see it was down more in the morning, not as much in the afternoon. Right now, down 1.05%. And again, don't have average volume yet. Well, don't have it on either the 2-day or on the half day. And again, we've been very reluctant to jump into any of this because we didn't have volume backing up any of the move. Let's look at where we are with gold. Gold, of course, peaked most recently back on the week beginning 20th of May, bounced off our ceiling here. Oops, I didn't mean to move that. I meant to move this down. There you go. And of course, this week starting off down again for gold. Again, another doji as far as the 2-day candles go. So lots of indecision, not average volume there. And almost average volume in the morning going down, not so much in the afternoon. So gold is negative right now. Let's look at HODL. That is our Bitcoin ETF. It's up over 2% right now. Now we saw Bitcoin heading down on Thursday, on Friday. It was down in the morning on Monday, then popped up Monday afternoon. We'll see where it is going. It has fallen well off that trend line, and we can see the Heikin Ashi candlestick drawing us a red down candle. Now, those of you might say, Tom, wait a minute. Why are we seeing a red down candle if it's an up day? Because it's Heikin Ashi candlesticks. And if you don't know what Heikin Ashi candlesticks are all about, you need to take our Heikin Ashi candlestick training. Just look up Heikin Ashi candlestick charting wealth. You'll see 2 of them there. The older one has several 100,000 views, although I would encourage you to take the latest one, and you will get even more out of that. It's one of the best trainings we've done. If you can't find it for some reason, just email me, cw@chartingwealth.com. I'll send it to you. I'll also put it in the queue for our trainings coming up in the next few days. But again, if you didn't take that training over the weekend, go back. Inverse funds. I think we have some bad news coming. Don't know when it's going to come down the track, but I tell you what, we are going to be ready for it. That is where we are as we start off Monday. Again, our trade, particularly in the NASDAQ 100, still going up quite nicely. But like we say, at some point, it will end. I think as John Kenneth Galbraith said, in the end, we're all dead. But hopefully that'll be a long way off. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.